Live from the Sky Newsroom. The Chancellor to unveil plans for pension mega funds in the biggest shake-up of the sector in decades. Apple faces a legal challenge over its iCloud storage, which could see a potential payout for 40 million customers. Plus, the Chief Executive of Checkatrade on why the cost of building work has soared in the last couple of months. Very good morning and welcome to Business Live with me, Darren McCaffrey. We're going to start with the big news today, and that is that the Chancellor, Rachel Reeves, will use her first Mansion House speech tonight to unveil plans to create new pension mega funds to help boost investment in business and infrastructure. The Treasury said it could unlock some £80 billion worth of investment, with fewer but larger funds giving greater returns. The plan would be similar to schemes that are used in Canada and Australia. I'll speak to Melanie Durant. She is partner and public sector consultant actuary at Barnett Waddingham. Very good morning to you, Melanie. Just talk us through, if you can, from what we know thus far, and it's been pretty heavily briefed from the Treasury, what the Chancellor is likely to say tonight, what the plan is with these mega pension funds.
Good morning, Darren. Thank you for having me on here today. So in terms of the pension mega funds, we are thinking that there's some maybe interesting use of the language. So it's more about the mega pools. So the pools are already in place, the LGPS investment pools. And from the press release that's come out, we're generally going to be assuming that we're seeing possibly some fewer pools, so some consolidation of some of those pools that are already in existence, which was largely the travel already, the direction of travel, and some of those pools will need to be FCA regulated. So some of the pools are already in place. They might need to just be reviewed, or they may no longer be allowed to be in existence. But we don't know. There's obviously lots to still come out of tonight's speech.
Yeah, and indeed, as you've rightly pointed out, in some regards, actually, this was enacted, I think, by George Osborne back in 2015, when it comes particularly to local councils and local authorities. Hasn't quite got to that stage that the government would like. Why, though? Why does it matter to have these kind of mega pools? Why look to Australia and Canada as examples for that?
Well, I think you're right. The government is just a little bit frustrated by the pace of change, but there's a lot that needs to happen for any assets to move, for these changes to happen. And actually, from my experience, what's happened with the pooling and what the funds are doing, the LGPS funds, is they are actually making a lot of progress. There's a lot of movement happening pretty quickly, but in the government side, it's not actually quick enough. So there are things that they are going to try and force through to try and make that happen. And in terms of saving that 80 billion, whatever number that ends up being, it's more to be around those investment charges. So if they think there's fewer investment managers involved, fewer expenses that need to be paid, then therefore they can save that money. And there are savings already being demonstrated, but I think from the government's point of view, it's not quick enough, even though the pools and the funds are working really hard to get to that point already.
But why, I suppose, and what I'm trying to get at here, does size matter? You've talked about saving money there, but is this also about these pension funds being able to invest in bigger projects with higher returns?
Yeah, absolutely. I think that there's projects that the government want these funds to invest in, whether that's infrastructure, local investment. But you've got to remember that these LGPS funds, they are investing in order to get the returns to meet those benefits of the members in the future, to pay out their pensions. So this is the real purpose of the LGPS, but there is a lot of money there, and the government would like to understand better about how that can be used to follow their own agenda to some extent. And if there can be savings to be made, then arguably that money can be used for other things, such as infrastructure, such as bigger projects, because like you say, it's about size, and a fund on its own can't necessarily invest in the things that the government wants it to. So if you bring all those funds together, they can invest in much larger projects that the government would like to have investment in.
And so I suppose, Melanie, the question then is, what do you say to those this morning saying that this is a mistake, that actually some of these smaller funds do operate well, they are good, for our economy. What would you say to that?
I would say there's a huge range of, of funds across the country and how well they're administered and how well they're governed. Then they are doing really well. I think if you look at the LGPS as a whole in terms of what it's doing in its asset returns, it's in a pretty good place. And I think that's why the government wants to get some of that money. But in terms of the way it's governed, the other thing that's come out of this speech is to have a more of an independent review of how the governance arrangement works within the different authorities. And they still do want that control. There's the speech and what might be revealed tonight is that they might lose some of that control, and that's where some of the controversy will lie, because it is about the local fund, local people, and if you can't invest locally, if there's direction that isn't allowed to happen anymore, which isn't going to be the case, hopefully, but if there's that lack of control, then it just means that they're not able to necessarily do as much as they want to do. So that's where some of the more controversy is coming.
Great. Really, really interesting stuff. Melanie, thank you very much indeed for your time this morning. And don't forget, we will have coverage of the Chancellor's Mansion House speech due to take place around 8:30 tonight. Full coverage here on Sky News throughout the day, and indeed that speech live a little later. Let's bring you up to date with the rest of today's news stories now, though. And Southern Water has had its credit rating downgraded to junk by Moody's as it struggles with its increasing debt. The company, which is controlled by the Australian investor Macquarie, is one of a number of privatised water utilities with debt issues. The fashion house Burberry has launched a £40 million cost-cutting programme as part of plans to turn the corner on a disappointing second quarter. It saw losses of £53 million for the half-year ending in September, down from a £223 million profit from the same period last year. Revenues fell 20% year-on-year to just under £1.1 billion, as the firm has also suspended shareholder dividends. And the pub chain Young's says it expects to see an £11 million profit, to hit profits, given that tax change that the Chancellor announced around increased employer national insurance during the budget. Its Chief Executive, Simon Dodd, said the rise would result in significantly higher costs. Today, it reported an overall revenue jump of nearly a third to £250 million in the 6 months to the end of September, boosted by this summer's Euros football tournaments. And don't forget, you can get all the latest business news. Just scan that QR code and get access to our money blog throughout the day on the Sky News website. Now, millions of Apple customers could be entitled to a payout if a consumer rights group wins its legal case against the tech giant, which is suing Apple over the way it deploys its iCloud. It claims that Apple has breached UK competition law by giving its iCloud storage preferential treatment, effectively trapping customers with Apple devices into using it. Apple says it rejects the claim that customers are tied to the iCloud and says it vigorously will defend itself. Well, we'll have more on what Apple had to say in a moment, but let's first speak to Lisa Webb, who is a senior lawyer at Which. Very good morning to you, Lisa. Just talk us through this action that you're taking and why, I suppose, you think it's necessary.
Morning, Darren. Yeah, this is something that is bigger than just Apple telling people, look, use our product. This is what we consider to be anti-competitive behaviour. Apple has been steering its own customers towards its iCloud services. Very often, if you're an Apple customer, you get told, look, you've run out of storage on your iPad or on your iPhone. You've got two options. One is either delete stuff, get rid of your data, or the other is pay Apple some money and they'll help you store it. Now, any organisation that has got a dominant position in a market is under an obligation to make sure that they don't distort that market. And actually, that's exactly what we think Apple has been doing by steering its customers towards its own product, rather than letting everyone know that there are lots of other products available. And actually, that's been making other organisations less keen on entering the market too. So in terms of choice, there's very little choice for Apple customers.
Well, let's hear what Apple have had to say, at least if we can, about this this morning, because they've issued a statement to us here at Business Live rejecting the idea the customers are tied to using iCloud, and as I say, they will vigorously defend themselves, according to a spokesperson. This is what Apple said in a statement to Sky News. They said that Apple believes in providing our customers with choices. Our users are not required to use iCloud, and many rely on a wide range of third-party alternatives for data storage. In addition, we work hard to make data transfer as easy as possible, whether it's to iCloud or to another device. And we reject any suggestion that our iCloud practices are anti-competitive and will vigorously defend against any legal claim otherwise. What would you say in regards to that statement, Lisa?
Well, I think Apple will obviously say that. They're of course going to defend their position. For anyone who is an Apple iPad or iPhone user, I think they might have a quite different experience though, because in terms of being offered choices, arguably, Apple customers are not offered multiple choices. Like I said, you get that email saying either delete your stuff or sign up to more Apple storage. Apple's even put the price up on its iCloud storage of late, and people will get locked into that. The other thing that we've spotted is Apple makes it very difficult to leave. Some things can't be stored on other platforms at all. It's only iCloud that you can store certain elements of data. So by making it harder to leave, by not encouraging the competition within the market, actually, we think Apple has broken the law. And as a result, consumers are the ones getting ripped off.
Yeah, in saying that, Lisa, I mean, lots of people have got iPhones. Yes, they're clearly aware of iCloud, but there are other services out there. People do know about them on the whole. I mean, most people who have a phone are pretty tax-savvy these days. And these are also big players, Let's places like Google, they're not small companies.
Well, it's funny you say that, actually, because the number of people with smartphones and tablets might not actually be all that tech savvy. These are things that have become essential everyday items for pretty much everyone across the board. So it's not necessarily true that everyone who has one understands all of their options. The other thing that's worth noting is that Apple customers have become quite used to, over the years, being locked into an Apple ecosystem, only using Apple products. And what we're arguing is actually if Apple had behaved appropriately in the first place, there would be far more competition. Prices would have been driven far lower, and as a result, consumers wouldn't be being ripped off now.
And Lisa, if you guys do win this case, what do you expect the kind of flow out to be? Are we looking potentially at Apple having to change their practices, maybe compensation for those iCloud users here in the UK?
Absolutely. We would like to see compensation for the users who we think have experienced detriment. We'd also like to see Apple opening up those platforms so that others can compete on a level playing field, because we think competition is incredibly important for consumers and for manufacturers alike.
And we've been talking today, I think, on the website, there could be, is it tens of millions of people here in the UK?
We think there could be around 40 million UK customers affected, and those are iPad and iPhone users who've obtained iCloud services since the 1st of October 2015. So this is quite a long period we're talking about too.
OK, well, we will keep across that case. As I say, Apple say they're going to strenuously defend themselves. We will, as I say, keep across what the result is and potentially the result for UK consumers. Very, very interesting to speak to you. That's Lisa Webb there from Which. Thank you very much indeed for joining us. Now, anyone having building work done on their house over the last while may have noticed that things have got a little bit more expensive. According to Checkatrade, building costs have jumped some 19% in the last quarter alone. It's just released its latest home improvement index, which found that on average, cost of building has gone up from just over £10,500 to £12,634. It's also found that roofers are the least trustworthy tradespeople and most likely to be declined from its site. Well, let's speak to the man who's in charge of Checkatrade. He's the CEO, Jambu, who joins us down the line now from central London. Very good morning to you. I suppose, first of all, for people who Checkatrade's a pretty big brand, but I'm sure there are people watching at home who are unfamiliar with it. What do you try and achieve at Checkatrade when it comes to tradespeople?
Hi, Darren. Good morning. Thank you for having me on the show. Checkatrade is the UK's leading destination for finding a quality tradesperson. We are a British business, and our history is 25 years of really supporting consumers as they seek to find quality tradespeople to help support them with home improvements and fixes. We count 50,000 British SMEs as our members, and they help support those consumers in finding and completing the jobs that they have across their homes across the country.
And what you find in this index is really interesting in the sense that building costs are going up a lot this year. Why is that? Why up 19% in the last quarter alone?
Yeah, if we take a step back, what we're seeing is that there is continued growth in demand for building works, repairs, and fixes, whether that's emergency jobs or planned work. That's driven by people staying in their homes, renovating versus moving, but also, I think, highlighted by the importance of the transition that we're seeing around green energy projects and the demand for categories to support winterization and efficiency as a result of increasing energy prices. I think if I take a step back, what that means is that demand has increased and the cost of materials has also gone up, but the cost of labor has also gone up dramatically. And I think that is exacerbated by the broader trade skill shortage that we have here in Britain. Our estimates are that the UK will require somewhere between 700,000 and 1 million new tradespeople over the course of the next decade to support the existing demand for work. And that is something that we are working actively to help support and grow with training providers, local authorities, and government, because I think that's actually what will ultimately unlock more opportunity and a greener future.
And Jumbo, is there a concern, though, that as the costs continue to escalate, and if they do, and the pressures that you've just talked about, that actually it might dampen demand, that people just might not be able to afford some of the essential works they need to do?
No, of course. And I think that's a very real consideration in terms of what we're seeing in terms of the categories of growth. And we all know that the cost of living and changes related to what people have to spend for basic necessities has gone up. I think how we're focused on helping is to bring more transparency to the industry and help consumers understand what typical jobs should cost, both in terms of the kinds of jobs, but also there's quite a bit of variation depending on where across the country that you live. And our cost guides that we publish to anybody, not just to Checkatrade customers, allow consumers to find what those costs are likely to be. And that was the genesis of publishing this home improvement index. And it's something that we'll continue to publish quarterly to help consumers and tradespeople alike understand how those costs are changing and where the opportunities for growth will come from.
And it's really interesting because we're showing a laptop on screen now, because in the end, you're kind of a technology company in the sense that you guys think the future of a lot of this work is going to be helped along, I suppose, by technology. Talk us through what that means. I mean, it means kind of people taking pictures on their phone, doesn't it? And working things out that way.
That's right. I think for us, we see a really generational opportunity to digitize the home improvement and repair space, which today is still largely offline. Right now, it can take weeks of research to find a quality tradesperson. Many are booked up months in advance. And so what we want to do is put the tools in the hands of consumers and trades alike to help finding, booking, and completing their jobs easier. There is also a role for technology to play in this sector. If you think about how you book a flight or how you find a flat to live in, that has changed a lot over the last 20 years. And this is a really interesting industry because the work has to be done by quality tradespeople. That's the only way consumers will be satisfied. But there is a way that we see for technology to add value in helping those tradespeople run their businesses more efficiently and helping consumers identify the right problems to solve and the right trades to work with. So imagine a world where you could take a photo of the problem that you have, and that helps recommend the right tradesperson for you to work with. And that's certainly our vision.
And just very finally, while I've got you, we've been talking today about the fact the Chancellor's got a speech at Mansion House later on today. Labour came into power talking about being a pro-business government. There's been some criticism since. What's your engagement been like with this new Labour government as a significant business player here in the UK?
Our engagement has been really positive. We represent 50,000 Checkatrade members. They're SMEs across Britain who are really focused on building, and they're entrepreneurs who have built these businesses from the ground up. We recently launched our Trade Skills Index alongside the Skills Minister at the Labour Conference. So the engagement has been positive, and I think the goals are very clear. I think our view is that we can help support those SMEs in terms of their growth trajectory by using technology to assist in both how they run their business and how they can generate more demand.
OK, Jambu Palaniappan, the Chief Executive there of Checkatrade, thank you so much indeed for joining us this morning here on Sky News. There you go. We're watching Sky News. You are. It's Business Live. We're going to take a quick break in just now. We're looking at the markets. The FTSE 100 up a little this morning. We'll have all the details on why in just a sec. Stay tuned.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
I'm Martha Kellner and I'm Sky's US correspondent based here in Los Angeles. Sky News, the full story first.
I'm Martin Brunt and I'm Sky's crime correspondent.
I'm David Blevins and I'm Sky's senior Ireland correspondent. I've spent 30 years reporting the journey from conflict to peace.
Free wherever you get your news. I'm Neville Lazarus and I'm Sky's reporter based in Delhi.
Weeknights on Sky News.
This is your chance. Tell people. Welcome to the Politics Hub.
A police force has apologised. If you want to find out about Grimsby, you come to the docks.
I'm live in Jerusalem.
Are you not concerned that that could lead to all-out war?
Hello there, good evening. There are fears of an upsurge in violence. What's at stake here?
You are watching the press preview, a first look at the front pages as they arrive.
A show of military might and menace. Why should the West trust you?
Frankly, I don't care whether the West trusts us or not.
Sky News. Get the full story first.
Have a quick word for Sky News. Is the West right? Are you fueling Russia's war machine? American journalist Evan Gershkovich is on trial here, but was first on display.
I'm Ivor Bennett, Sky's Moscow correspondent.
Our app gives you the very best of Sky News wherever you are. Breaking news, videos and analysis.
Evidence of the crisis.
Podcasts, watching us live.
Live here from Washington.
Wherever you get your podcast.
All in one place. And all at just the touch of a screen. The Sky News app. Get the full story first.
Now, let's take you through the markets on this Thursday morning. And Asian equities finished mainly lower, led by a drop in Chinese and Hong Kong equities as the region weighs up the significance, of course, of President-elect Trump in the White House from January. European stocks also opened up slightly this morning, all in positive territory. A sea of blue, as you can see there, as traders bet on another cut rate from the Fed next month. Here, the FTSE 100 has also ended up higher, up 0.53%. Burberry is one of the big gainers this morning. Shares in the UK fashion house retailer up nearly 19%. That's despite a fall in half-year revenues. Its new chief executive says that he's acting with urgency to stabilise the business. Let's have a look at the currencies, and we can see the pound continues to tumble against the dollar, which has really strengthened, particularly since President Trump's re-election, effectively, or election win last week. It is at $1.27, and it's down also a fraction against the euro today, and a price of Brent crude oil risen a little bit, just under $73 a barrel. Well, let's bring in our guest, Lindsay James, investment strategist at Quilter Investments. Very good morning to you, Lindsay. Let's start, if we can, with Burberry. They've had a pretty awful time in terms of revenue and profits, and yet the share price is way up today. Why?
Well, I think it's the reassuring tone that we're hearing from the new CEO. Now, they've got their work cut out there. They had half-year numbers out today showing that revenues were down 22%. They had an operating loss of 41 million. Now, this is in contrast to a business that last year in the same period made over 200 million in profits. So they really have an uphill struggle to turn this business around. But so far, we're hearing all the right things from the new CEO. He's talking about repositioning the brand to focus very much on their core offering of outerwear and returning to their roots. Now, this is potentially going to broaden their appeal. It had been moving into the direction of really focusing on quite a niche customer base, which hadn't worked. So they needed to do something quite momentous, really, to try and get that brand back on track. But the stock's really been in focus this week. Earlier in the week, we had rumours coming out that they were being targeted by Moncler. Now, Moncler have actually refuted this, but I think it points to the fact that with the shares down about 40% year to date, this is quite a unique brand. It's one of the few that's still independent and listed on the stock market. Is going to be a target at this level.
Yeah, been a bit of a rollercoaster week, or a couple of weeks, it should be said, for Burberry. Let's talk about US inflation, if we can, because it's ticked up a little bit again, and there's maybe even an expectation, particularly with the new Trump presidency, that inflation could continue to rise in the US.
Well, yeah, that's exactly it. So although the data came out in line with market expectations, we are starting to see inflation picking up in some measures. So the 3-month annualized rate now of core CPI was at 3.6%. Now, if we go back 3 months, that figure was 1.6%. So there's still definitely signs of inflationary pressure within the economy. However, I think the market at the sort of bounds was expecting maybe something a little bit worse. And so there was some relief today that those figures weren't actually worse. And I think the economists that we were looking at were talking about month-on-month reading coming in at about 0.4%. Actually, it came in at 0.28% for core. So bit of a sigh of relief. And we're seeing the probability built into market pricing for a next rate cut in December rising up to 80%. Before the CPI data came out, that was about 59%. Okay.
And Lindsay, just in 30 seconds, if you can, because we've out of time, Eurozone GDP figures out today, and it is up a little.
Yes. Now, these are figures that are repeating figures that we came out a couple of weeks ago. It's another measure. It's another sign, I think, that all is not lost in the euro area. Growth of 0.4% quarter on quarter is reassuring. It's a pickup from the Q2 rate of 0.2%. And this is coming on a day as well where we've got global bellwethers reporting from ASML and Siemens with very good figures out. A trading statement from Siemens, seeing the shares up there around 7%, and ASML Investor Day as well today, pointing to strong growth coming through from AI. So all is not lost in Europe. Yes, there's pressures coming through from tariffs, but there's some very good businesses here.
Great stuff, as always. Lindsay, really appreciate your time. Lindsay James there this morning. Thank you very much indeed. You're watching Business Live. We're back, of course, at 4:30 this afternoon. But coming up next on Sky News, we're going to be live in Green Park in central London, where the King's Troop Royal Horse Artillery will fire a 41-gun salute to mark the King's 76th birthday. That's coming up at midday here on Sky News. Stay tuned.